Hi, so today we're going to talk about another interesting topic, which is selling equity, whether it's mutual funds or stocks, when to sell equity. So, I'm going to tell you four conditions when to sell equity. Remember, there is no other condition under which you should be selling equity. So, as we say, invest for long term, invest for lifelong, keep doing SIPs, let compounding play its role. Well, that's very good, and that is what you should be doing as a long term investor. But remember that at certain point and under certain conditions you should be selling your equity, and there are only four conditions. So I'm going to go one by one, and also I'm going to tell you that there is no other reason you should be selling your equity. So if any of these four conditions are satisfied, good, go ahead and sell it. If not, continue investing, stay invested. Okay, so condition number one, portfolio rebalancing. Now, a portfolio typically will have an investing strategy. It may not have an exit strategy, but if it has an investing strategy, then it may tell you that, let's say, as per your investing strategy, which is customized for you, as we do in our elite program, you may have an investing strategy where 60% of your funds are, or your portfolio is in equity, 40% in debt. Now, when you do that, there will be times, because the markets are volatile, the equity is growing at a different rate as compared to debt, there will be times when equity will get imbalanced. At that point, you need to sell your equity and bring the portfolio back to balance. This is very, very important to derive optimal returns from your portfolio. So, equity balancing or portfolio rebalancing or portfolio balancing, this is the first condition in which you can sell your equity. Remember that when you do that, automatically you're executing sell high, because portfolio balance goes on the higher side only when the markets are volatile towards the higher side. So you automatically sell so that you can bring back the portfolio balance. So it's important to keep a tab on your portfolio balance and see whether it sticks to your investing strategy. If it is going beyond it, you have to sell it. So that's point number one, why you should be selling equity. Point number two, there could be life events coming in your life, right? For example, it could be your children's education, marriage, you want to go on a big vacations, you have certain passions, you want to open up a venture, etc., etc. So you may have various life events planned in future, and when the time comes to execute those life events, you will need a lot of funds. So for example, you have a 2 cr portfolio and you need 30-40 lakhs for your kids education or marriage. Now at that point, you will need to withdraw funds from your portfolio, and it is very, very important, keeping your portfolio balance in mind, you may have to withdraw certain funds from your equity portion of the portfolio. Could be stocks or mutual funds. Especially look at those funds or those stocks which have been consistent underperformers or which do not fit into your value analysis. Just get rid of them. Okay, so life events is another opportunity to rebalance your portfolio. So if your portfolio is imbalanced with the higher equity, and your life event comes, make use of that event to sell off more equity and less of debt to fund your event. So that's one another reason you can sell equity if there is a life event coming up and that life event is big enough, which could probably disturb your portfolio balance. So in that case, you should make use of this condition to sell equity. Third, flawed fundamentals of a company you are invested in. Now, when you invest in a company, you may see a very good potential, very good growth, good ratios, excellent value analysis. Everything is fitting into the right kind of company you wanted to invest in, and you started investing. Over a period of time, management changes happen, competition changes, industry prospects change, businesses change, technology shifts happen. So a lot of things happen, economic shifts happen across the world, which impacts that company's business. And when such things happen, you may have to redo your value analysis and see whether it still fits into the fundamentals that you really want it to. And if your value analysis guides you that the fundamentals are now flawed enough and doesn't fit into it, or the market value is just too high and intrinsic value is suggesting you to go and sell it, considering that the growth is not enough now. So in such cases, that's another opportunity to go and sell your equity. Number four, And the last, you got a even better opportunity. A lot of times what happens is people say the markets have gone high, okay, let me sell equity. Now the point is, okay, fine, markets have gone high, you had a target of 20% returns, you got 25% returns, you go and sell. But what do you do after selling? What do you do with that money after you sell it? You wait. Either you wait for an opportunity to get back into the market. That's a stupidity, because waiting outside the market, waiting for it to fall down so that you can reinvest, a lot of people have lost money in that. So that's not the reason to sell. So the only other reason to sell is you have a much better opportunity, and that opportunity is identified much before you sell it. Okay. So let's say you're getting 25% returns or 20% returns, and you clearly see a great potential in another company where you can easily get 30 to 40% returns over the next few years. That is one reason you could sell your equity. If you're not seeing that, then just don't go out and sell in panic that you've already got your target returns. Now let me go and sell it. So these are the only 4 reasons. Let me recap them for you. Portfolio rebalancing. To rebalance your portfolio, you have to sell equity. Life events. You've got a certain event in life which demands certain cash, certain liquidity from you. It's a big amount. You cannot get it all from debt. You have to sell equity. It will keep your portfolio rebalanced as well. Third, flawed fundamentals. You, after a few years of investing, you realize that the fundamentals are not the same. You go on and decide to sell. And fourth, you have a much better opportunity because of which you want to come out of equity. These are the only 4 reasons you should be selling equity. There is no other reason you should be selling equity. You should stay invested as long as possible. And 2 most common issues what I see people talk about, and they keep repeating those mistakes again and again. They sell equity not because of these 4 reasons. One, they say markets are at an all-time high, I should be selling. That's a lame reason to sell equity. Markets are an all-time high, fine. They will go another all-time high. They will keep going all-time highs. That's what you expect from the market. So what do you do once you sell? You are losing so many opportunities once you sell. So they can be a high which is higher than the current high. So that's going to continue happening, right? If the companies are growing, you keep expecting the markets to keep growing and keep touching new highs. So selling at a high, an all-time high, or a 52-week high, these are all stupid and lame reasons to sell equity. Second major issue I see people sell equity is they want to book profits. Now that's another lame excuse. When you book a profit, as I said earlier, when you book a profit, fine, you book the profit, you got your principal back. What now? What do you do with that money now? So unless you have an opportunity waiting to be invested in, booking profits is an absurd thing actually for me. So when you book profits, you're losing much more profits. Remember that. So markets can continue to keep going higher. So if any of your conditions meet these 4 conditions, sell equity. Otherwise, don't sell it. It's as simple as that. Don't confuse with any other noise in the market, any other technical jargons. You don't need to. Just these 4 conditions. Okay, all the best. Keep investing.